Hi, everyone. This is Jason Burek of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. I like having him on every 3 or 4 months to get his views on the global economy. He's editor of the Hat Trick Letter at goldenjackass.com. Jim Willie, thank you for joining me again.
Oh, it's a pleasure being on, Jason. I tell you, it's getting a little bewildering about all the activity going on. We got so many different directions happening at the same time.
Yeah, there's a lot of military news, a lot of financial news. The global central banks just keep on coming out with garbage. A lot of heroin and cocaine being put into the system, and bankers admitting that it's getting pretty ridiculous. Theater of the absurd.
It is. We're deep into La La Land. I keep making the point that this is surreal, but as long as you have QE in place, and as long as you have U.S. military involved in wars, you can just keep a clock running, and the death of the dollar is a guarantee. QE and wars are a guarantee for death of the dollar. And I don't think more than 2%, 5% of Americans are ready.
They're definitely not, because they have no clue what's going on. I mean, as long as the stock market's going up, I mean, most of them are still like so excited about the election. I mean, even the Democrats are really interested in the stuff going on with Trump, but it's a major distraction. We'll talk about that later in the interview. My first question for you though, Jim, is do you think many central banks are colluding and coordinating behind the scenes to manipulate markets, interest rates, and currency exchange rates? How much more monetary cocaine and heroin can the global financial system take before all control is lost?
Well, I think very definitely for the last couple of years at least, we've had a very strong coordination among the central banks. And by that I mean the major ones, the Fed, the Euro Central Bank, the Bank of Japan, the Bank of England, and maybe even the Swiss National Bank. But something seems to be changing in the last few months. I think we're to the point now where the central banks are starting to act like the Wall Street banks did in 2007 and 8, looking to have some of the sharks kill the weaker shark. And by that I mean they're in a survival game now. These are national central banks and continental regional central banks, and I think the priorities are shifting now. The United States has come out with it's really the U.S. Fed. I call it the U.S. Fed. I know it's not correct, but they're managing the U.S. dollar. Their offices are on the U.S. I think bringing out the Exchange Stabilization Fund by the Department of Treasury with that fake rate hike in December, that was a very big deal. And it was a declaration that the Fed was going to defend the U.S. soil. And I think other central banks are starting to act more in their own interests. The Bank of Japan has gone very deep into negative rates and let it be known that they might even go deeper than where they currently are. And they have announced even a year and a half ago they're going to go to infinite volume. The Euro Central Bank is doing things that it never did before, and maybe the Fed would never consider. They're supporting stocks openly. They're dictating terms. They're taking independent pathways, and I think it's for survival. This control is being lost. It's a disdain and a disgust for the U.S. dollar by Eastern nations, by the emerging market nations, by really the producing nations. In reaction to QE, QE is a death warrant for the dollar. You cannot have African Zimbabwe-style monetary policy, printing money, covering U.S. government deficits, covering toxic bonds from Wall Street. You can't do the QE and expect the rest of the world to just fall in line and say, well, it's no big deal. It is a big deal. They're undermining the global banking reserve system. So the Treasury bond market now, it's starting to break. You can talk about all the cocaine and heroin in the global financial system you want, but QE does not fix anything. It actually causes a reduced activity. It's not even financial stimulus. It's well, there's your buyer of last resort, so there's no need to go out and find real buyers and investors. you're seeing a lot of pressure in the primary dealers right now. They have to match up. That's evidence that the system cannot match on the tangible side what the derivative machinery does. You got huge reverse repo activity going on with treasuries. And that just means, in my, I don't have a great understanding of reverse repo, but my understanding is that they're taking the cash from the big banks, supplying them with treasuries so they can leverage even greater. And the Tower of Babel is higher and narrower now. The leverage is greater and there's more volume of it. I think everything is breaking, and the main crack is going to be not so much the dollar. Well, let me back up. There are going to be two cracks. It's going to be dollar usage and the Treasury bond foundation for the whole system. The Chinese have their new China interbank payment system, and I'm told from two different independent sources that it has had live testing that's been a success 2 months ago. Now they're connecting it to the bond markets and the Forex markets. This is a non-dollar SWIFT alternative system, interbank, bank-to-bank transaction systems. I think they're going to go live with oil payments. Maybe the Saudis will announce that they'll use it. I mean, we got so many things happening here, but I think the CHIPS alternative to SWIFT is going to kick the dollar to the curb while the Treasury bond market continues to show tremendous cracks, illiquidity, distress, all kinds of problems. There's really not much of a follow-on act they can do for treasuries, Jason. Really not.
Yeah, I think they're in the end game, the monetization of the treasuries, where the Federal Reserve and the Exchange Stabilization Fund have to buy up the treasuries. We've seen, evidence that the foreign countries, these large sovereign wealth funds, have been dumping a lot of their treasuries because they need the cash. They're broke too, right? With the low oil price and other things, they got a lot of problems in their own economies. They have to sell their savings to protect their own governments from collapsing. And that's another problem with the QE system, right? When you do QE, you destroy the value of those treasury holdings. So, the countries, they're not stupid. They can see the writing on the wall. China can see the writing on the wall that if they keep accumulating massive amounts of treasuries, right, the U.S. Treasury is going to destroy the value of those.
Well, it's funny. As the Treasury market has gone toxic, the principal value of the bonds is posted as quite high because you have low interest rates. And if we get below 2 and stay below 2 and head toward 1.5%, as I expect we might for the 10-year Treasury bond, we're probably going to see the foreign holders conclude this price is marching up slowly and slowly, and the dollar is showing great strength relative to the other toilet paper currencies, as I call them. They might get scared that suddenly the Treasury bonds are not going to be tradable. Suddenly. All right, you go up and up and up gradually in value. And this is my balloon argument. The dollar is like 100 balloons tied together, and they're rising. After a while, it's just going to pop. It's not going to crash. I don't have a forecast that the dollar is going to crash. My forecast is that it rises, then rises some more, and vanishes. I think we're going to have a movement sometime in the next several months or a year or so where the Treasury bonds don't trade. You can't trade them. You got to negotiate some liquidation. That's called a default. I think we're going to see a U.S. government debt default. I can't put a time on it because I don't know if we have maybe another war or another ratcheting up in QE or something absurd and very illegal.
Yeah, and we've seen that in Japan where their own government bonds don't trade for hours, sometimes days, because the government has bought them all up and the private sector doesn't want them anymore and they don't have faith in them. Why do you think governments and central banks gain from implementing negative interest rate policy, or NIRP, Is this a main part of the cashless society and totalitarian control plan that the United States and other governments have planned?
Well, what a loaded question. Yeah. No, um, they gain almost nothing with negative interest rates except disrespect, contempt, and maybe there's going to be a surprise movement since gold has gotten off its multi-year low, a movement to remove cash from banks and buy some gold. They might actually spawn a second gear for the gold move from what we've seen in January and February. I think we're going to see severe liquidity drainage very soon as funds go out of savings. People might say, well, now that they're doing that, I've got a maturing CD and I don't want to buy another CD and make 0.75%. Or I don't want to buy another CD and invest in another CD and make 1.25, 1.3 with different time duration. So they might just take their money out of the banks, figuring that, gosh, if they're offering a negative rate, maybe they're going to just close their doors soon. So they might actually have a psychological effect and a movement effect. But here's where I think there are some actual advantages for the banker cabal. If you're working a bond carry trade and you're working say the 10-year yield versus the very short term, well, that might actually widen with these negative yields. So it might help the bond carry trade for its final phase. You also might actually bring some stimulus into their derivative game with respect to the interest rate swaps. Well, gosh, if it pays them to borrow at the short end, well, maybe they can amplify the machinery for interest rate swaps instead of paying an interest, even though it's very small, to generate artificial 10-year Treasury bond demand. So we might get some principal gains, wider spreads, stimulus to derivatives, improved carry trade profits. But to me, it's proof that the big banks have lost their main commercial lending business. They don't have much of an investment banking business anymore. You don't hear much about issuance for stocks and bonds. And when you do hear about lately for stocks, it's energy companies that immediately use the money to pay off some Wall Street debt. So it could be that the banks just can't make money anymore with commercial lending. It used to be, the model used to be, pay out 4 or 5% for savings because they can lend it and make 10 and 12 and 13%. And the difference is their profit margin in the lending business. But what's one of the biggest commercial lending pieces right now but automobiles? And aren't they mostly a giveaway? Don't they have 0% lending? I mean, it's really ridiculous what's going on. So the banks might not be able to make money anymore. So what they're saying is, if you want to put money in our bank, we can't make money lending it out, so we're going to make money directly off your deposits. So screw you. There's going to be a big reaction, boomerang, negative. To me, though, to make a crude analogy, I don't mind being crude once in a while. I am a jackass. I think the banks are directing the nation to breathe through their asshole. And next, they might declare human excrement to be industrial output. Wouldn't that improve the economic statistics? Didn't they also improve about 4 years ago and call fast food industrial output? Manufacturing?
Well, they got ketchup changed to a vegetable, right? Even though it's high fructose corn syrup and like diabetes, so liquid diabetes basically. Yeah, wow. With the sugar levels and things like that. But you brought.
Let me just comment on cashless society for a minute here. This is part of the negative interest rate, cashless society. It's usually mentioned in the same breath. I call it nonsense. I don't care if Sweden is going to it. Sweden is a very hidden Nazi entity. They weren't. I got, oh gosh, a remarkable comment from a Swedish hat trick letter client last week. They said, Jim, you may not know this, but it's the headquarters of the Bilderbergs. The Wallenberg family lives there. And the Swedes were not neutral during World War II. They were pro-Nazi. But they made a public statement that they were neutral, and that way they didn't get attacked by the West, by the Axis, by the Allies. Or they didn't get attacked by either side. They didn't get attacked by the U.S., British, and they didn't get attacked by the Nazis. So the Swedes are now doing their cashless society. I've got a couple clients, and they're saying, yeah, it's across the Swedish banks now. But what does cashless banking operation eliminate? Bribery, maybe not of politicians because they know how to, fill a bank account from a hidden source, but just basic bribery. I mean, if you bribe a bank or bribe a judge for a nice decision, usually you make it cash. But it eliminates drug transactions. There's still suitcases with $500,000 floating around to buy drugs. It eliminates gambling. There's a lot of cash-based gambling in casinos. To be sure, there's some that's done off a credit card. But when I did my gambling off college football and things like that when I was younger, it was all cash. You're going to eliminate the fencing of stolen goods. You're going to eliminate payments or make them difficult for prostitution. There'll always be demand for prostitution as long as they're pretty girls and horny men with money in their pocket. And what about the whole black market? I mean, I want to buy a stolen Galaxy cell phone. I'm willing to pay $200. Okay, well, Costa Rica, you can find it, but they don't need fencing in Costa Rica because they go straight to the used product stores. There are no anti-fencing laws here. Oh my gosh, it's so crazy. Anyway, I'm anxious to witness these final desperate acts, Jason, of a dying, powerless, fragmented banking cabal.
Jim, it seems this NIRP is tied in with the real economy in the U.S. collapsing. I mean, the banks don't even really need depositors' money anymore. They get all this free money from the Federal Reserve that they can basically borrow at zero and do, derivatives bets and all these other things on. But the real evidence in the economy, we're seeing stores closing like crazy. Boeing is shutting down plants like crazy. They're a big part of global trade. We're seeing Sports Authority, which is a large sporting goods store in the United States. They just went bankrupt. That's a sign the consumer in the United States does not have savings and discretionary income because there's no full-time jobs. And we're seeing, massive amounts of restaurants and retail shops in the U.S. closing like crazy. So there's just mountains and mountains of evidence that the global economy is in dire straits, and the U.S. economy is not. Maybe it's doing a little bit better than a couple other economies in the world, but it's not doing well like the statistics claim.
Well, not only is the U.S. dollar performing less badly than the rest, the U.S. economy is collapsing less quickly than the rest. It's all collapsing. I call it the king dollar reign of terror that has turned toxic and is destroying capital around the world. It's really sad what's going on. We don't have any common sense with either monetary or fiscal policy. When we had a stimulus program a few years ago from Obama administration, it was one of the stupidest, most blockheaded, inane, thin programs ever in U.S. presidential history. We don't think much anymore. My regular complaint that I offer in the United States regarding criticism is we don't know what capital is anymore. We don't know what money is anymore. And we don't know what inflation is anymore. And we also happen to think war can be positive. So on those 4 counts, the brain trust of the United States is affecting the mental performance of the whole nation. We're getting dumber, Jason. We're going backwards as a human species. I remember growing up, I used to think, well, monarchies, that's not a good method of government, but there might be some good kings out there, good queens. And democracy is really the best, but I can't find a single country that has a good democracy. Anyway, I'm getting off the point. We're going backwards. We're going backwards in every possible channel.
Yeah, people are being brainwashed, and there's cultural Marxism in the United States. It was actually Keynes who said that war is good for the economy, and we know, everyone who listens to my channel and listens to your interviews know what we think of Keynes. He's a real POS.
Well, he's a moron.
Okay, well,
he's a moron. He's a proven moron.
Okay, well, I want to move on to the next question. We've had a rally here in the stock market. Also, I think a lot of it's tied to the oil price rallying a little bit. Was this recent bear market rally in oil and base metals done so banks wouldn't have to write off so many billions in bad loans? Is that tsunami of loan defaults still coming soon?
I think the big banks engineered an oil rally. One of the motives was definitely, as you said, to bring some relief to the billions in bad loans. But my smartest market watcher is Euro Raj on my team of colleagues. And he wrote me and said, Jim, it's really quite simple. This rally in oil, it ended almost precisely at the what's the word? Maturity date of triple witching. The March futures for oil. They wanted a year-to-date flat performance on oil so they could wiggle out of rather enormous futures contracts where a lot of traders were short and they didn't make any money. And the banks took the other side and they didn't lose the money. So it was both for the actual credit portfolios and the financial market oil futures contracts. It was all engineered, and I made, I don't think it was all that bold. A couple clients said, Jim, that's a bold statement you made in the March newsletter. I said, look for 40 to be kind of the end of this rise. Look at how it went from upper 20s straight to 40 without any hiccup, without any pullback. It's an engineered rally. And now you're encountering not only the March expiration, but you're encountering the moving averages and downtrend lines. So I think this rally is spent, and we're probably going to test the lows again. But I don't think we're going to reach the lows because Wall Street is on the job, and they're going to keep supporting it. I think the energy sector tsunami is still unavoidable. When I read and learn about the oil market and the oil industry in North America, it's a little different in Canada. It's actually higher cost in Canada when you get to the western provinces, when you get to the, the Athabasca, Alberta-based, try saying that fast, Athabasca region, Alberta province, tar sands. Their cost is higher. But in general, if you make a general statement about North American energy business, they need $70 to $80. So I don't care. I don't give a rat's ass if it reached $40. How about 43? Doesn't matter. They're still running negative, and we're going to start seeing we're start seeing a lot of projects shut down because they can't hedge anymore, or their hedges. Well, they wouldn't have much value in hedging anymore. What are they going to do? Hedge on the $40 price for going lower? Well, that'll have some value, but they really need to continue hedging at $80 and $90. But those are expiring, and they're not offered anymore. There's no underwriter for them anymore. So the energy firms are going to have to declare losses. It was very, very interesting that the Dallas Fed a year ago, and they get caught on this, they advised the banks to avoid marking to market. They advised the banks to give more time and leeway and put aside the covenant agreements in violation with the energy firms, their energy clients, because the portfolios were so damaged and impaired that the big banks, if they went forward and followed the usual 90-day non-performing loan rules, they would have probably shut down. We would have had some bank failures, Jason. So the Dallas Fed advised fraudulent accounting. And what's kind of funny here is they said, give more time for the energy firms to do some asset sales and liquidations, raise some money so they can pay off some of the banks regarding their loans. But everything I read about, everything I learned and heard about, indicated that the asset sales weren't going very well. I mean, they were writing down the equipment 30 and 50%. What good is a drilling rig if making money off the rig doesn't result in a profit? So they're not liquidatable at healthy prices. You can't do any more oil price hedging. That is the big point right now. Therefore, these North American firms are going to shut down projects. They're going to default on their bonds. They're going to default on commercial loans. They're going to see violations of their covenant agreements. And there's going to be a continuing tsunami, as you call it, of energy loan defaults. It's unavoidable.
Yeah, it's looking that way, and there hasn't been massive oil production cuts yet. There's been some, but not nearly enough considering, how low the oil price went. It's been surprising. In fact, a lot of these oil producers, Jim, the lower the oil price went, the more they continued to drill. They were desperate for any revenue just to buy themselves, another couple months to not go bankrupt and default. But, we were talking about this before we started recording in emails. I've heard from one of my sources, the banking regulators are being told by, Wall Street bankers who come in and present to regulators that U.S. banks only as a whole have 7% average exposure to oil and energy loans.
I think that's a lie. It's 3 to 4 times that. Wall Street did something else that was very clever in support of this oil rally. They actually came out with stories saying, we were wrong on the surplus oil output. It's 10 million barrels a day less than we thought. Gosh, there's no end to the accounting fraud.
Yeah, and the other thing you mentioned there with the revolving credit facility, that's a debt for equity swap. So the banks get off the hook on loans that can't paid, and then the risk gets transferred to the sucker shareholders who buy the shares then of a company that may end up, going bankrupt.
Yeah, these revolver cuts are very important. And from what I read, there were a couple of cases where recent secondary stock issuances went directly to pay the Wall Street banks. And then right after JP Morgan received payment on revolver credit lines, they cut off the credit line. They reduced the credit line by 50% and made a forecast that the industry would do the same. Yeah, industry will do the same because the biggest are doing that. So, it's deceptive. I mean, do you want to be an investor where your stock shares are only being devoted to pay off Wall Street debt and not going for capital investment that'll be profitable? Now, you got to be really stupid for some of these investments. But, I call it Charles Darwin at work. Let him do his magic. It's natural selection. Weed out the morons. There's still some people who think that buying homes is a good idea because you're going to get a rebound. You still find people thinking that mortgage bonds are good. You still find people who think that emerging market debt is going to come back. You still have people thinking that junk bonds and, oh my gosh, I tell you, just let Darwin do his work. Unfortunately, Darwin is not permitted to get all different, all different sides to his sword and blade cutting down humanity. There's just too much social net and bailouts, and I want to see some Wall Street banks go down. They're insolvent.
They are insolvent. And there's also, a lot of Midwestern independent banks in the United States with way more than 25% exposure to oil and gas loans. Some of them have well over 50% of their loan portfolio to oil and gas loans, and a lot of Canadian banks like that too. So we haven't seen really any of those ones quite fail yet, because I guess the Federal Reserve has told them not to call on the loans. What they're telling the public right now is, we have one bad loan outstanding, one large bad loan, and the rest of the portfolio is in decent shape. But, that's not true.
Well, if they obey the Fed and delay and marking it down and calling it a non-performing loss and actually allowing the default on it. What are they going to do? They're only going to have a bigger default next quarter. And I don't see any Wall Street banks doing acquisition buyouts of the most exposed smaller banks with respect to the energy industry.
Yeah, I don't see any Wachovia type acquisitions or WAMU or anything like that. Yeah, I don't see that unless the Federal Reserve is maybe going to force that going forward. We'll have to see. If they force anything, we'll know that something's very close to collapsing.
Yep.
I want to change gears here and talk about gold now. We've seen the gold price rally in U.S. dollars. There's been a gold bull market back in other currencies. The GLD claims to have gotten its hands on over 100 tons of physical gold. We've seen evidence of some governments start to sell gold, like Venezuela, I guess, who's bankrupt. Is it even possible for the GLD to get its hands on over 100 tons of physical gold in a week or two?
Can I be really honest that I don't care? I mean, it's a legitimate question, and it should be answered by some people, but do we have any honest accounting for the GLD? Have we ever? Have we had ever any honest accounting for the COMEX? They're moving from one category to another, and suddenly there's a whole lot more eligible gold, and where'd that come from? Well, it's an accounting ledger item shift. Okay, and I heard stories that, good, credible stories that maybe JP Morgan was mixing their copper inventory with silver so that it really wasn't silver showing up, it was copper, but they called it silver. I don't care. Maybe we got a nice big switcheroonie going on. I love that word. I mean, it gives some mockery to the term. It got some switcheroo going on, where they're moving some gold into GLD so that it could supply COMEX more quickly because COMEX is just about dead.
Yeah, it seems like the governments, maybe some of these governments that are in worse financial positions have been leasing or swapping the gold. I heard Rob Kirby give an interview recently. I don't know if you heard that one. He said there's basically no way, and he helps get gold in tonnage to get that much physical gold into GLD. So it would have to be, a paper transaction with leases or swaps from a government then.
Absolutely, but remember how for several months, more like about 30 months, we had depletion of GLD. So maybe what happened was GLD really didn't go down as low as we were told it was. And now they're just doing some corrections to the falsified low figures of GLD, where a lot of GLD was taken, and maybe not as much was taken as they thought during the January rally. So we really don't know, but the biggest point that I can stress is that both the COMEX and the GLD have horrific falsified accounting. So it's not really worthwhile to break it down too much and give it a lot of thought. It's not worth thinking too much about.
Yeah, the last couple of years, Jim, I heard from some of my sources that the Wall Street custodians of GLD had been, ransacking the gold out of GLD and selling it on the black market in India, and not really, saying the exact amount of gold they were taking, but they were, making enormous amounts of profits off the books.
Yeah, and these are gold bars that are supposedly owned by shareholders. And unfortunately, if you look at the prospectus, you'll probably find a loophole in there that allows the Wall Street banks to sell it to India. I mean, the prospectus was a gem. It attracted all the most stupid of investors in Wall Street. And I love the excuse of, well, I like buying GLD because it's really easy.
Yeah, it's liquid. It's liquid.
It's liquid. It's easy, and it's kind of fun. I'm a gold investor suddenly, and it only took a click. Didn't have to do any hard work like ordering a shipment off a ramp and insuring it with Brinks. Yeah, right. The trouble is, buddy, you don't own any. And I want to see lawsuits, Jason. I want to see GLD lawsuits. I want to see COMEX Gold Futures lawsuits. I want to see these things shut down. But you know, it's been interesting. I have my own argument regarding, not argument. I have my own hypothesis regarding GLD, and you know, if you want to bring it up, I'm going to offer my own little 2 cents or 2 ounces of gold coins worth on the GLD fund. I think it was a brilliant move to set up GLD. I believe, and this is Euroraj again. Euroraj comes up with some brilliant insights from time to time on a regular basis. He told me 2 years ago, Jim, I think GLD is a device. I mean, forget the con. Let's just think of what could be real behind it. It's a device to securitize gold ownership for all the gold in motion between the mining firms and the COMEX. And the motion could be to the mills of, you know, high-grade ore, 90% dory bars, and it's movement to the mills, it's movement to the refinery, it's movement to the COMEX. It's gold in motion. And it's a huge number when you consider a worldwide figure on gold output. So GLD securitized all that, and you know, they could claim they had bars behind the investment, but what they really had was gold in trucks in various degrees of refinement in motion. And they securitized it. It's a brilliant move, Jason. But Euroraj made a point to me. He said they're going to drain GLD, and I believe that somewhere around 600 or 650 tons officially will be their zero. They do have some tonnage, but when you count all the amounts in volumes in the trucks in motion, from the mills to the refineries to the COMEX warehouses, the 650 tons, 600 tons might be their zero. And notice that we had the rally in gold right around the number that I had been purporting for the last year or two. I do a quick story in the gold and currency report for the Hat Trick Letter, and I say we're getting down to that 650 level, and don't know for sure, but somewhere around 600 to 650 might be the lowest. Well, it could be that the gold rally occurred because they drained all the gold out of GLD, and Wall Street decided we don't have any more gold to steal out of GLD to supply the COMEX, so we're going to change sides and go long. Big players went long on gold. I think it was the people who've been stealing the gold out of GLD fund. They ran out. Yeah. They went down to effective zero.
That would make some sense, because if the gold price was higher, right, and they could get the gold price to a high enough point, they could maybe get some more mines into funding, and that would replenish the supply that they've taken out. So then the miners could ship back more metal, and they could refill the GLD and act like it was never taken.
Well, that's a nice argument, but I used to embrace that argument too, but I've had some gold mining expert clients tell me that now you got an 18-month window to restart, and not only that, but you need sometimes $1 billion to undo the sealing, not with a C but with an S. They sealed it shut, complying with environmental rules in North America. And this is especially true in some of the more productive mines in Northwest Territories like Yellowknife and all those areas in the western, and they're not even provinces, they're territories of Canada. They're desolate territories. It takes a long time. The point is, it takes a long time to reopen mines, and it takes a lot of money to reverse the sealing process with an S. So Wall Street, I think, has triggered their own demise of the COMEX by allowing the gold market to whipsaw in December and January. And I kind of called it in my newsletter. I said we're going to see some vast changes, and probably including in the gold market as the new year turns. But my reasoning was a little different. It had to do with the white dragons in China, and they just have a lot of new priorities that they said were going to be enacted in January. So we saw it, and now I'm starting to show the gold chart more in my newsletter because we have a reversal off a multi-year low pattern.
Yeah, Jim, it looks like the bottom is finally in for gold. At that gold price, when gold was down to, 1075 and silver was down at 13, those were at prices where even gold and silver miners in foreign countries where the gold and silver price, they were really struggling. Even with cheap oil, they had debts, they had bad balance sheets. The mining companies, if the metals prices had gone much lower than those prices back in December, there was going to be, mine shutdowns. It was that close. They were on the brink. Many of those miners.
Well, there would have been a tremendous acceleration of mine shutdowns because there's always mine shutdowns and projects shut down. This is continuous. It's interesting to look at the various factors behind the rebound of the gold market. It's fun to see, and I like pointing out something that happened in the silver market. I knew something was going to start turning at the end of last year because there were three big phenomena that took place in the silver market. Let's see if I can remember. One is that the not immediately released minted coins. Okay, let me give examples. A 10-year-old silver eagle was being priced differently from a 1 or 2-year-old silver eagle. They were giving collector item premium to a 10-year-old silver coin. That had never been seen before. The second point was that the live market went dry, and that was the emergency high premium silver market where they were paying 20-30% more than the spot price just to get their hands to comply with some kind of a project, who knows what. And the third one was that the silver cycle market just completely vanished, and that's for your silverware and dining room sets being all brought together and bought by a liquidator with a 10% reduction off the spot price paid to the estate. That all vanished. There's no more discount off the spot price for recycled silver off silverware. I'm talking about dining sets. It just goes straight to the refinery. So collector item, live market, and the silver cycle. That's all changed radically. That told me that could be the very end of the silver decline. And it turned out to be the case.
Now, Jim, I want to talk about the stock market here. There's been, it seems for the last couple of years, every time the technicals in the stock market, the chart looks really bad in the short term. There's a surprise stock market rally every time the technicals predict a crash coming. Do you think the powers that be can hold markets and the global economy together through the U.S. presidential elections in November?
If there's one financial market that I hardly ever pay attention to, it's the stock market. And that has to do with my own personal experiences getting hurt in the 99-2000 tech telecom bust. I did my own long analysis for a few months, a lot of reading in the evenings. I don't want to mention, I don't want to give credit to certain corners because I've alienated myself from a certain group that was very helpful to me in some of their research that I read. They stabbed me in the back later, and I just don't want to give them any credit for anything. Call me nasty. But I did a lot of analysis in 2000, late 2000, early 2001, and my conclusion was that currencies, central bank policy, and bond markets, they control the day, and the stock market is the tail. I don't really care about the stock market. I regard the stock market now as a propaganda piece, that if they can keep the stock market up, all the people's mutual funds and pension funds, for example, my sister, will remain quiet. They won't be motivated to buy gold. They won't be motivated to make any changes in their allocation for their pension funds. because the stock market's up. And that's one of the biggest reasons why the Fed began to invest in the stock market through their Wall Street proxies. They never invested in the stock market in previous administrations. I don't think that even in the Bush II administration they were investing in stock market. They might have invested some in the banking sector, but not in the S&P like they have now. Now, we've got a propping of the U.S. stock market that is absolutely absurd, and some of the Fed governors have even said so. They said that the main factor, this was Fisher. Fisher's a real maverick out of Dallas, formerly out of the Dallas Fed. He said there are several main factors behind the stock market, but they're all QE. Okay, well, I don't care about the stock market, Jason. Now, they might try to hold things together for the presidential election, but there's another venue I don't pay attention to. I've gotten maybe 50 questions in the last month or two from clients. What do you think about Trump? What do you think about Hillary? What do you think about this? What do you about? I write them back now. This has been my answer now for most of the last 6 weeks. I don't follow third world politics. I don't care about Hillary. I don't care about Trump. Trump is not all he's made out to be. He's not the hero. He's not, squeaky clean. He's got some pretty dirty connections that might come out soon. Don't know. I don't care. To me, it's an occupant, and I like how Benjamin Fulford calls it the White House spokesman for the Khazarian cabal. The White House spokesman for the U.S. government corporation as representative for the Vatican, who owns the U.S. government incorporated, USA Incorporated. The people are not really told what U.S. government structural, financial, contractual obligations are, but there's a big Vatican component to it ever since the Civil War, ever since the Great Depression. When we come out of our crises, we have a new owner, or we have a tighter grip on the same owner. I don't care. My guess is, my belief is that the new president, rather the next occupant of the White House with all its perks and all their crazy sex parties, maybe the next president will have fewer gay sex parties. But the next president's going to be presiding over the U.S. government debt default. That's not a job I think worth taking.
Yeah, that's a good point, Jim. And Janet Yellen's a bag holder too. She was the patsy in this. She's probably going to be the residing Fed chairman when the shit hits the fan. But one thing I think most people don't really understand about the president, there's a lot of people who think the president can do a lot of changes. And yes, Obama added Obamacare, he added more taxes and things like that. And president can declare war. But if you live outside of D.C., you would understand this more. Our listeners, many of them don't. There's so much bureaucracy here, Jim, that the bureaucrats, there's so many of them, they're the ones who really spend the majority of the money and do the policy changes and things like that. So the president, maybe, a long time ago, the president had a lot more control over things, but the bureaucracy is entrenched. And even when Reagan was president, all the bureaucracy had to realize was, we'll just wait 8 years and Reagan's gone and we'll be right back to how things were after Reagan's gone. So that's like the view from Washington, D.C. here is we don't care who's president. It doesn't really matter that much because we'll still have our jobs in 8 years when this bum is gone.
Well, yeah, I agree with you completely. I have my own confirming little pieces that I like to add that make it a little bit more of a mockery. I've heard research done on what Obama actually does with his time, and 3 activities have taken up about 70% of his time: golf, fundraising, and vacations. This is a part-time job for the president. Okay, also, when it comes to the voting process, I was following something that was, up my alley, and that was things like Gallup polls and voter polls for presidential preferences months ago, many months ago. And I started, I'm a semi-expert in that. stratified random sampling. I know about things like that. And what I heard and read was that there were falsifications of certain polls to make it look like Hillary was actually a contender.
Yep.
When her following was really more like in the teens, and they made it to seem like 25 to 30%. And what I try to do is look at 3 or 4 major polls and look at discrepancies, because if they're all good, solid, random, stratified random samples, the differences should be due to random sampling error. In other words, they should be tight, and they were not. I cannot remember. I believe that Gallup was the most twisted, tainted, corrupted.
Both parties have rigged the election system, so really a third party can barely even get on the ballot. A third party doesn't have a chance. You know, they have their hand-selected candidates. They figured out how to gerrymander and rig the system to the benefit of their own chosen candidates. I think, you know, Ron Paul was actually winning popular votes in a number when he was running for president years ago. He was winning some states for a while, and, you know, they did their best to basically just kick him out of the system. So, I mean, they've perfected how to manipulate the system. There's been bid rigging, vote rigging, I mean, going on for a long time. Lyndon B. Johnson was a master at it. There's a lot of documented evidence that, you know, candidates have been doing this for a very, very long time. Well, that both parties have this master.
You're very kind and tactful. Ross Perot had threats from the Clinton crime family, which is an offshoot of the Bush crime family. The Clinton gang threatened to murder Perot's daughters, so he backed off. Another thing that's very close to my own bailiwick of statistical analysis is software programming. And I like looking at the actual software, hearing about software, and how the software is used to change votes, all through Florida back in 2000 and 2004 and 2008. It's a big battleground state. Ohio too. All through Ohio and Florida, very big populous states, valuable for the electoral college votes. They just had way too many reports of the software changing their vote. And by that I mean, well, someone would vote for Kerry in 04 and not Bush, and vote for senators and this and that and congressional districts, and then it would say, all right, here's a summary of your votes. Click for vote on the bottom. And wait a minute, I voted for Kerry. I didn't put Bush there. Okay, they changed the votes in the software, and Congress, in its incredible corruption, made it illegal to challenge the software in the Diebold machines. Okay, and now we're hearing stories that Utah and Texas had changed votes in favor of Hillary. And there are a couple of new states lined up who are actually changing their software because they don't want the election in primaries to be stolen. One of the characteristics of a third world nation is ballot stuffing, vote rigging, machine tainted. The U.S. qualifies now on another factor for third world. And this is how you get a really good argument going with the rah-rah people who think that the United States is still the best country in the world.
Yeah, Trump will save the country and the economy, and he'll fix the debt problem. I hear that a lot now.
Let me also mention another statistical area. It's called exit polls. For the longest time, I did actual reading from journals, using my own professional background. And I came across a very interesting statistic. There are very few really high correlations in data in the world. Very few. I mean, my favorite as well, pressure and volume, very highly inverted correlation. Well, that's because pressure times volume is a constant. Okay, well, fine. Outside the laboratory, It's very difficult to find really high correlations. One of the highest I've ever encountered was exit polls versus the district results on a vote. It was about 90 to 92%. In other words, if you sample 100 people coming out of a certain school in Ohio, who'd you vote for? Kerry or Bush? Who'd you vote for? Romney or Obama? The results at the district level had a 90 to 92% correlation with the outcome. And what happened in Ohio, this research journal did a report, and they made a district red. If the exit poll did not match the result from that district of Obama versus Romney, and there were a lot of red districts. In other words, just, for loose heuristic argument, you should have a 90% probability that it would not be a red district. Whether, if you've got that kind of probability on coin flips, 90%, you should not have so many districts that are red that did not match. In other words, you had vote rigging.
I'm not surprised. I mean, it's been going on, Jim, for so long in the United States, and the American people, most of them haven't seen documentaries. They don't question it. They think the system is fair with the voting and things like that. But I mean, it's well documented that there's been vote rigging, going back even before Lyndon Baines Johnson, although he was one of the greatest people in the history of politics at actually doing it. But there's been political machines in Chicago and so many other cities and municipalities that have been famous for doing this. I think honestly, though, most people on Main Street, regular business people who have jobs or a small business or something, who are doing okay or pretty good in this economy, most people don't care about the debt problem or anything like that. As long as the stock market doesn't crash and their business is doing okay, there's a lot of people who don't think long term anymore about, the problems in society.
Well, I agree with you. They're getting apathetic while they're advancing in their ignorance. I have two more stories about politics, if you could allow me. I'll try to be quick.
Yes. Yes.
I have a friend, and his name is Craig. He lives in Philadelphia. He lives in the Germantown area of Philadelphia. And Craig volunteered to be a watcher, a monitor in his district at the voting machines for Kerry versus Bush, 2004 election. And he said, Jim, it was really unbelievable. I had no idea I was going to find something so blatant. But 5 of us were assigned, and we showed up at 7 in the morning to check all the voting machines. We had the lever type machines, not the Diebold software. And we noticed that all the machines had 500 votes for Bush and 0 for Kerry to start it off. So we set them back to 0. Okay, the other story I have is a bigger smear against the Bush family, which I think is an absolute plague on humanity. Jeb Bush, in the year 2000, did something that was improper, but he never was called on it. He took 100,000 black voters who had traffic violations and declared them as ineligible voters for the state of Florida in Gore versus Bush. The rule is if they have a felony, they cannot vote, but not a traffic violation. And nobody called Jeb on it, and the result obviously was a lot of black voters didn't have their opportunity to vote. At the time, 80, 90% of them tended to vote Democrat. So we got so much corruption, and now it's becoming institutionalized with the Diebold software. Switching. Go ahead.
There's a really good quote from a comedian. I can't remember if it was H.L. Mencken or Will Rogers or one of those guys from like 80 or 100 years ago, but he was like, if voting actually meant something, then they wouldn't let you do it.
Yeah, Mencken had a quote that America has the best Congress that money can buy.
My final question for you, Jim, before I let you go, has to do with China. Noted hedge fund manager Kyle Bass says in his February 2016 newsletter that China will need to print around 10 trillion US dollars, according to his calculations, worth of RMB to bail out its banking system and municipalities from, misallocation of capital, bad loans, etc. What do you think this means for China and the global economy? And instead of printing the money, do you think China could just dramatically revalue its gold holdings instead of printing all the money?
First of all, I have a lot of respect for Kyle Bass. I actually quote him. I've probably quoted him 4 or 5 times in the last couple of years. He's a Hong Kong-based hedge fund manager, and he's outstanding. Very smart guy. So if he thinks that China has a problem, then maybe I'm wrong in saying, no, it's all exaggerated. Maybe it is a problem, but I don't think it is as grand a problem because of one simple, provable fact. China has no external debt. By that I mean foreigners don't own any of their debt. It's all internal. Therefore, it will be liquidated and resolved internally. It does not have the risk of a serious currency decline and crisis as a result. Now that's a very big point, and I have a joke here. I say, well, all the activity in resolving this debt will be between the 4 walls of China, and not the Great Wall, but the 4 walls. Okay, now move on. If they do need to resolve their debt, and they have the ability to do it internally to their 4 walls, they have a tremendous amount of gold, way more than their official statements. And you get a hold of their official statement. What do they say? 1,050 tons, or is it 1,400 tons now?
I think it's over 1,500 tons, and they add about 17 tons a month now. It's pretty steady accumulation that they officially release. Right. Those are the quote-unquote, air quotes, official purchases each month now.
And when I look at that, I do a big yawn, and I think, well, that's worthy of reading the next time I sit on the toilet and take a dump. That's about all the relevance and importance I attach to it. It's dump reading. And I don't have, Playboy or National Enquirer or Reader's Digest. With me, I'm different. I just enjoy my peace. Okay, so if they've got a lot of gold, why isn't it listed in their official central bank holdings? I don't think their official central bank holdings even include the SAFE Sovereign Wealth Fund. Isn't that quasi-governmental? Okay, well, it's not official. Not official. Okay, they got another much smaller sovereign wealth fund, but the major one is SAFE. There's more. When the U.S. government announces its official gold holdings, do they include the Bush crime family? Do they also include the Rockefeller Satanist family? Of course not. Of course not. What a stupid concept. So do you think the wealthy ancient Chinese families that control a lot of levers and strings in China, you think their gold is counted in the official 1,500 tons? Of course not. Well, what is the volume of the ancient Chinese family gold holdings? I hear it's between 25,000 and 30,000 tons. I'm not talking about global accounts. I'm just talking about simple White Dragon family gold holdings. 25,000, 30,000 tons. All right. $500 million is roughly what 8,000 Fort Knox tons was worth. Okay, so they've got about 3 or 4 times that. They've got $1.5 trillion to $2 trillion worth of gold. They could monetize that. Let's call it $2 trillion for argument's sake. They could monetize that at 30 to 1, and suddenly they've got $60 trillion of legitimate non-fiat toilet paper. Non-toilet paper, not fiat, legitimate gold-backed currency infused in the system. I think 60 trillion would cover their problem. So Kyle Bass mentioned they got 11, what is it? What did he say? 10 trillion. I don't think that's all that significant.
Yeah, he didn't.
Go ahead.
Yeah, he didn't mention that they would revalue their gold or anything like that, but I do know he owns gold. But yeah, I mean, China has imported, I think, almost 5,000 tons of gold from Shanghai Gold Exchange withdrawals just in the last couple of years. So 2014, 2015 numbers, when you add those up, that's almost 5,000 tons of physical gold imported into China right there.
Yeah, and there's a lot more that they can. I think most of the talk about the Chinese debt distress is coming out of Wall Street and the U.S. government, and it's to distract attention away from the U.S. dire situation with respect to debt and with respect, say, to the emerging market dollar-based debt where New York and London might be on the hook for as much as, say, $5 or $9 trillion, emerging market. Okay, and then you have all these reports that say, well, take a look at Social Security and Medicare and all the obligations the U.S. government has, and it's about 70 trillion. So what we're doing is we're distracting from the 18 trillion in official government, U.S. government debt, and the extended obligations of 70 trillion, and we're trying to make the Chinese 10 trillion sound big when they have no external debt and when they have 25,000 tons of gold available. And I don't believe any of the Bush family gold is going to be available for the U.S. government purposes. Once in a while, I wonder, Jason, if the Bush family keeps aside maybe 8 or 10,000 tons of gold and plans on offering it to the U.S. government in order to get a pass on their tremendous crimes against humanity and the U.S. people, and war crimes, theft of Fort Knox, and trillion-dollar bond fraud in Wall Street. The Bush family is behind a lot of it. I had a very interesting comment given to me in the middle of 2014 from The Voice. Back then, the big theme was rehypothecation, which is a very nice word for stolen gold and IOU left behind. And The Voice said, Jim, very interesting development has produced a document that passed by my desk recently. He said, you may not know it, but there are 7 or 8 major gold vaults in the world. They're not publicized. They're like wholesale warehouse type vaults that make sure all the markets get the gold that they need. And I said, well, someday I'd like to know where they're located. He said, well, don't worry about that. Here's the point. They're all getting drained. There are 2 or 3 that got drained like a target draining. And the Chinese did the draining. And one of the draining done by the Chinese of a very major global gold vault was where the Bush family stored their gold. The Chinese rehypothecated most of the Bush family gold. Very interesting little developments that I get wind to, and it's hard to get my hands on a lot of stories like that. But I don't pay much attention to the Chinese debt problems and the Chinese empty cities that they built. They might have some plans that we don't know about. And by the way, not one of their empty cities is on the coast. Does that tell you something? So they don't have external creditors. They don't have a big trade deficit. U.S. has a $500 billion annual trade deficit. If we have to fly on our own with a major currency for just U.S. purposes, it's going to be under immediate threat of heavy devaluation and constant devaluation because we have a $500 billion trade deficit. I mean, they can confiscate and force $1 trillion a year of private pensions. The government, Washington can. But it's not going to address the trade deficit. So a new dollar can have suddenly some solvency on the government ledger for deficits, but the economy for the nation is at risk from the $500 billion annual trade deficit. And that's what I focus attention on. And I'm getting more and more indications about the global currencies coming into view, gold-backed, more than one, including the Deutschmark, coming back, new gold-backed Deutschmark. It might have a name, though, of the Nordic Euro.
Yeah, Jim, I think you're being conservative with that 70 trillion US dollar mark. There's a Democratic economics professor, Lawrence Kotlikoff, and he's a hardcore Democrat. He even had government economists and government accountants look at this, and they said the number is actually over 200 trillion. So those are more. So I mean, the 70 trillion maybe but if people are going to get more benefits and things like that, we're looking at over 200 trillion in net present value of unfunded liabilities, and that's according to a Democratic economics professor and also, government accountants who have looked over the figures and run the simulations and numbers. But, the Chinese, I think I agree with you. I think the Chinese have a lot of physical gold that's been imported through the Shanghai Gold Exchange in Hong Kong. The refiners in Switzerland and other places are running 24/7, 365. Gold bars don't really leave China. Once they go in there, the kilo bars, they don't leave in there once they're refined to 4/9. And, I think the Chinese banks own a lot of physical gold. So, the People's Bank of China may claim to have 1,500 tons, but, all these large Chinese banks may each own 1,500 tons each and not declare their gold. And government agencies might also own 1,500 tons of gold. And the Chinese military might also have, an enormous vault of it, too. So if you add all these things up, that might be your 15 or 20,000 amount right there. And China doesn't have to declare those.
Well, you come up with a good point for a lot of different sources that might amount to 20,000 tons. That's all separate from the White Dragon's ancient family's 25,000 tons. So they might have 50,000 tons available. The Chinese, good point about the Chinese army. Some Western financial journalists refer to it as the Chinese Army Corporation. And they do that because they produce a lot of copyrighted material and sell it in the black market, like Microsoft software and Windows software and Microsoft Word and Office packages. But in conclusion to China, let me just make a comment that I, as a jackass, believe China might be in the process of triggering debt pressures to force breakdowns because they knew and know that the U.S. will break first. The U.S. will falter first. Start the process of the debt defaults because the U.S. will falter and break down first.
Yeah, and we've read there, even Jim Rickards in one of his books, and he has sources in the physical gold market. He knows Switzerland gold refiners and other people. He actually said, I forget if it was Death of Money or Currency Wars, he actually said one of his Switzerland gold sources was involved in a huge transfer of 500 tons of physical gold across the border from by the Chinese army into mainland China, that they helped do the transaction of 500 tons of physical gold. So I guess the Chinese army is accumulating their own stash or maybe moving it to a government agency or something like that.
Yeah, and it's not for weapons production. It's a financial move. Well, my point is that if it were for silver, you could make that argument. It could be for a stockpile for missiles and electronics and whatever consumed, not for gold. Gold, that's a financial gesture.
Yeah, it's financial warfare. I don't think anyone's dumb enough to, blow up a whole bunch of, 500 tons of gold. I don't think we're that wasteful.
No, I'm not talking about blowing it up. I'm talking about consuming it in weapons like O-rings for a missile. There's very little gold consumption used industrially. So if the Chinese Army Corp is accumulating it, that's a financial gesture.
Yeah, it makes sense that they're working on the next financial system. I think in September, I think the SDR officially the RMB goes into the SDR basket, so the RMB is going to be more internationalized by then.
Well, could be. We'll have to be watching this very closely.
Yep, and we'll have you back on again in another 3 or 4 more months. Jim, how do our readers get your work?
They go to www.goldenjackass.com. If you go there, you'll see a public domain page. Has a lot of links and descriptions and dates for hosted interviews like this. There are also quite a few, maybe about 12 a year, public articles. And that's the free material. So after taking a look at that, whether you're new at this or a veteran in what I call the global monetary wars, sign up for the newsletter. It's the hat trick letter. It has 2 parts. It's the Global Money War Report, and it's the Gold and Currency Report. I love mentioning the 2 favorite compliments, and I got one of them actually today. The 2 compliments I get that I love are, I've been listening to your radio shows for a couple of years and never thought to sign up for the newsletter, but out of curiosity I did, and now I'm kicking myself that I didn't sign up sooner, because it's a tremendous volume. Every month it ties things together, and there's no way in 1 or 2 interviews that I could benefit the way I do from being a Hat Trick Letter subscriber, reading your reports. The other compliment I get that I love hearing is, I was a subscriber of yours in 07, 08, and 09, and I've been away for a while, but now I'm back, and I'm kicking myself. I never should have left, because I missed it. I didn't find that kind of information and analysis tying it together like I have here, and keep up the good work. That compliment I just got yesterday from someone who came back. He said, I've been gone for 2.5 years, and I just came back, and I never should have left. I love hearing that. It's great. It's just great. I love hearing that.
Yeah, there's so many dominoes about to fall, and you're one of the people that keeps people updated on so many of the things. You saw a lot of the banks that were going to have problems in advance. You know, whether it's the oil and energy markets, the banks that are holding the loans, or the developing markets with the bad debt after that. I mean, there's so many dominoes that are, that could go down in the near future.
Well, it could be car loans stuffed into mortgage bonds, the car loans that are all toxic.
Yep.
Oh my gosh, there's no end. Then it could be the $1.3 trillion worth of student loans that are now the new subprime toxic area.
Yep, and not even bankruptcy will distinguish those. They may just do a bailout for those. There's a lot of people in my age demographic who have way over $100,000 in student loan debt. You know, they have a job, they're trying to start a life, and they can barely make they can barely afford rent and food and make the interest payments on their student loan debt. It's going to be a nightmare going forward. I have a lot of friends working 2 or 3 part-time jobs in the DC metro area with a supposedly low unemployment rate who are barely, able to pay their bills at all. I think a lot of people are going to end up sick because they're not sleeping, they're not healthy, they're going to have to work, 2 or 3 jobs just to pay off the debt. Then you're a serf, basically, right? You're a wage slave or debt slave, you're a serf then.
There are millions and millions of serfs right now. And it's just going to be a growing class. The professional working wage earner who's got a mountain of student loan debts, it's going to be a new economic class. They'll just never get ahead.
Yep, it's a new type of serfdom, and most people don't even want to talk about it or think about it. Well, Jim, I just want to thank you again for your time, and we'll have you on again in the near future.
Okay, thanks for having me. I appreciate it.